Hey, I'm Charting Man Dan. If you like this video, I encourage you to check out our website, TheChartGuys.com, home of technical analysis, learning, and education, where we broadcast live market coverage every morning, provide live chart consultation, and point out key levels on your favorite plays in our community chat room. Why not check out our free trial and join the best technical analysis community online?
Hey everyone, Charting Man Dan of TheChartGuys.com here doing a trade review from last week. This is MCD. The trade setup was on Thursday and highlighted it pre-market broadcast and then had that trade execution right at the start of the day. So let's highlight what I was looking at leading up into Thursday and what our signal was for the entry. So this is the daily chart. I cut it off here so we don't have the action of Thursday on it yet. This is what the chart looked like on Wednesday headed into Thursday. So some things that were pointing out or that stood out to me, we had some bearish reversal candlesticks make that 3 in a row. We had the bearish reversal spinning top, bearish reversal doji setting a lower high. Did see higher highs set, but another bearish reversal candlestick long upper wick. So the first two, or actually all three of them, had no confirmation yet, but it was showing that the bulls were tiring, especially after seeing this strong of a move over 2 weeks and then seeing those candlesticks shape up. That told me get ready for a bearish pullback. Some other things that stood out, look at this last bounce and look at the RSI pulling right back from 70. And then look at this bounce, hit 70, pulled back slightly, hit 70 again, couldn't break it, and then we were sitting at 68.97. So watching what the RSI has done at 70 in the past 3 months, looking at those candlesticks with those upper wicks showing profit taking. Another thing was the high that we had seen, which is the all-time high here for MCD, 125 on the nose. So that's a nice psychological resistance level. That is where we pulled back from on Wednesday. So what I'm looking for on this setup is just a red day on Thursday to confirm the bearish reversal. And what I'm going to be looking for an entry, we've got, let's see here, 5, 10, 15 trading days in a row with higher lows. We had one day where we had a lower low. Other than that, 14 out of 15 days higher lows. So I'm looking to enter in this trade right when we break the low of Wednesday, 123.86. And the stop loss will be if we break 125. So I would even put a stop loss at, say, 125.02 just to give a couple pennies of wiggle room. But that would be a stop out if the bulls were able to keep setting higher highs. So let's look at the weekly as well, what we were setting up for. This is how the candlestick did look, very similar at least. We had that upper wick being rejected from the upper Bollinger Band, and we had the bearish reversal weekly candlestick forming as well. We can see a similar bearish reversal candlestick at the top of a little uptrend here, and then we pulled back. So I was looking at this candlestick, looking at everything on the daily chart I just pulled out, and we were ready to go on a bearish entry with a break of 12386. So now let's look at the 5-minute chart and how the day set up. And we got that weakness and that entry signal on the first trade of the day. 12369 was the open. So if you entered bearish right then and there in the first couple minutes, we saw downside for the first 25-30 minutes. Hit a low at 122.91. Then we traded sideways a little bit. Bulls trying to establish support. We're watching this 20-period moving average resistance, which rejected the price. We pulled back 122.92. So that right there, a penny higher. I consider that a double bottom. So if you were looking at a day trade or a weekly option or even an option that expired next week, you would have some nice gains here on that move, that double bottom, and then turning this 20-period moving average into support right here at 11:35 a.m. That could have been your exit to lock in those gains if you were looking for a day trade or a short-term trade. If not, we saw some further bouncing around. Inability to break some key levels. We had a bounce attempt rejected at 123.53. Another bounce up here, 123.43. And then we pulled back with some bearish volume and new fresh lows. So bears are still looking good here. If you're looking for a swing trade, seeing those lower lows is a great sign. We then, after about midday, we saw the bulls start to show up here and seeing a little bit of an uptrend. So we were looking at a high again here at 123.42, which is lower than 123.43, so that's a bit of a double top. Bears are still liking that action as we pulled back. We did break through it right at the end of the day, but the high that we did hit on the end of the day surge here was 123.52, and that is still below this first bounce attempt, 123.53. So resistances seeing action both times and pulling back from that level right into the close. Seeing that bearish reversal candlestick on the close and that is confirming the reversal that we were looking at heading into today's trading day. So let's look at how the daily chart looks now as we are looking into next week if you were heading into a swing trade. And I'm setting that up here, so let's go on back to the daily chart, update it to get Thursday's action, and there's that candlestick. Bulls did buy the dip. There is a lower wick there, but they were unable to keep this 10-day moving average support. That is 123.38. We closed 9 cents below it. So we could potentially see the bulls show up on Monday after that lower wick showing the bulls bought the dip. It would be a red flag for the bears if we regain the 10-day moving average support, or if we break the high of Thursday, which was 124 even. So definitely seeing some psychological numbers here come into play. 125 even was the high, 124 even. So that's just a little reminder why you set your stop loss or sell target either just above or just below these nice round numbers, because other people are using those psychological round numbers and the price is rejecting from them. So the swing trade certainly is still in play, and a break of 124 may negate that on Monday. We'll see what kind of action we get, but as long as we keep this 10-day moving average as resistance, the bears are going to be looking for some further downside. And after we break the low of 122.66, we are going to be looking down here. There's not a whole lot of support. Moving average is all the way down at 120.72. I'm seeing a support here. There was a resistance at 122.01. Also acted as support back here at the start of February, the low 122s. So we can expect 122 to potentially be a support level. And with the low of today, 122.66, you can look at the low of March 16th, 122.67. So that is why support was found there. Support was found there in the past. So it's going to be up in the air where we are headed early next week. I am anticipating the markets to see a bit more upside before pulling back even more than we saw on Thursday, and we will see how it shapes up. TheChartGuys.com is the website. Free trial, no credit card required. Come check it out. I appreciate you watching the video. Hope you have a great rest of your long weekend.